you.
Good afternoon. You've tuned into Money Control. I'm Karunya Rao. With me is Manisha Gupta. What's happening? There's a non-stop bull run in the commodity space, and today all eyes on natural gas.
Oh well, yes, and we're trading very close to those 13-year highs that we saw in natural gas earlier as well. This was the time in the first week of March when Russia had just invaded Ukraine, is when we made multi-year highs, all-time highs in many commodities. Since then, there has been some profit taking as well in the last 1 month, but not in case of natural gas. So when you look at month-on-month prices, we are 41% up, and when you look at the last 1 year, we are 150% on the higher side for natural gas. This comes in especially after European Union says that they are looking to ban coal imports from Russia. Nearly 45% of European Union coal comes in from Russia, and they also say that oil and gas also is on pipeline. You know, there could be some caps, there could be some timelines in sense of sanctions that could be put out, and that is what is making markets quite jittery.
How much more are we paying for natural gas as consumers now, and for those who have CNG vehicles, for instance? What's the impact there?
Oh, pretty high. You know, as we've seen, the rise has come in from the 1st of April itself, and $6 per MMBTU is almost double of what we saw in the last 6 months. So for the next 6 months, and clearly India does work with a lag on what's happening in the international markets. So from $2.9 per MMBTU to $6.1 per MMBTU is what the kind of hike that we have seen here. And as we've been talking, Karunya, the gas prices, whether it's LNG, whether it's your cooking gas, all of that has been constantly rising. So we are in for higher prices for a longer period.
And what is the outlook there? Will there be some easing, or is it going to still, I mean, it pretty much looks to sustainable, the
I think it could sustain on the higher side. One, because we see gas mix as a positive for the environment. So gas comes into picture because of that as well. And with the kind of colder weather that is in forecast for the Western world, whether it's US and Canada, all of those countries, so the demand for gas is going to be on the higher side. That also is keeping gas prices higher. And also, if you look at the data, we are below the last year average when you look at the gas prices right now. The US inventories that came in yesterday show a decline of 33 billion cubic feet of gas. Markets were anticipating an increase in inventories by 1 billion cubic feet. So that was a surprise really, and is the reason you've seen the gas prices rise up. Not just that, not just the fact that we are on lower inventories on an year-on-year basis, we are on a lower inventory scale on 5-year average basis as well. So everything tells you that we are looking at higher prices from here.
What about gas distribution companies, whether it's Indraprastha, MGL? How will they fare now amid all that's going on in the
Or
space?
Gujarat Gas for that matter.
Gujarat
Well, all
Gas.
of these companies are trading on the positive, and the expectation is that we are looking at higher gas. And you know, the other point really is that even as the prices are rising, the kind of demand destruction that you would have otherwise seen is absolutely not visible. Is the reason you have Saudi Arabia increasing those premium official prices to Asia at a record of $9. So they also understand that even as there is lesser of availability in the international markets, there is no demand destruction. The demand is pretty strong at these levels.
So the higher amount of money that you're paying on your gas, maybe you can make it up by investing in the gas stocks.
Yeah, you must be doing that. You should be doing that. I think that is the best hedge possibility that you could be actually looking at.
But anything else that you'd like to flag off other than natural gas within the commodities basket?
You know, when we talk about higher energy prices, when you were looking at higher gas prices as well, it's not too far away when you look at the metal prices, and most of them are very high energy intensive. So even as yesterday was a bit of a profit taking, but today when you look at those charts on your screens, you have all those metals yet again trading in the positive. So whether it's about copper or nickel, where the volumes have gone lower because of that whole fiasco there, but aluminum, copper, zinc, all of these metals have come roaring back in last 24 hours because of the high gas prices. Aluminum more so, because International Aluminum Institute now says that if a global production was 86 million tons of aluminum in 2020, by 2030 it should be 119 million tons, because of 40% increase in demand is coming.
Wow.
So I think whichever way you look at these numbers, and they're all very, very
I mean,
bullish.
no matter what the inflation might be, what the levels might be, the buying is still happening, the demand is still strong across the board, which is quite surprising actually. But with that, we'll wrap up today's conversation on commodities. Many thanks for tuning in.